We have a negative trend on the rating, but from our point of view, the merger could have been a driver of further negative rating action. So getting such a potentially complex merger of two banks that are still have got a lot of work to do on their own, getting that merger off the table allows them to go back to focusing, as the CFO said, on the strategy that they have to execute. So, I mean, we saw in the first quarter that the results weren't bad for Deutsche Bank. I mean, they weren't good in absolute terms. It was a difficult quarter anyway for investment banks globally. Yeah. So, I mean, they've made a start by bringing the costs down in line with their plans. It's a tough revenue environment. So even they were hoping to make a 4% return on equity this year.
1.5%.
Yes.
So that's a big issue, right? But again, I want to ask you from a rating agency standpoint. One of the options that have been discussed, and this has also been reported in the media the last couple of weeks, is selling off or merging part of their asset management business, DWS. Reportedly, they're in talks with UBS. I actually spoke to Mr. Armotti yesterday, the CEO of UBS. He didn't comment on it. But I mean, how would you view that from a rating agency perspective, particularly because DWS is evidently the crown jewel in Deutsche Bank's portfolio?
Yeah, it's a good part of the business. They've already floated a part of it. It is a business, asset management, that generally requires scale. So we can see that the advantages for players to join together with other players in that business. It's tough because the margins are very low on that business still. So I think that kind of development is an option, but is not going to transform Deutsche Bank overall either way, whichever way that goes. It could be one part of the picture, but it's still being able to turn around the investment bank to make proper returns on a sustainable basis. That has to be done.
You indicated there that you thought that this potential merger, this tie-up with Commerzbank, would have been a negative driver from a ratings perspective. That's presumably predicated on the premise that you believe in the bank's strategy as it stands. The question I have for you is, how much faith do you and your team, and you may question the premise, have in the ability of the leadership team at Deutsche to deliver on what they're aiming to do?
I think that what they've set themselves to do so far is not unrealistic. But so to that extent, yes, you can see, and what they've done so far, they've executed on it, but it still doesn't go far enough at the moment to be able to say that will work for the long term. So even a 4% return on equity is not, a long-term goal. So I think we can see that. I mean, mergers, why the merger didn't seem like a good idea was because you had two players that were both having challenging situations. I think it tends to be a more positive scenario when you've got at least one strong player in the merger. And we've seen some of the US mergers that seem to be working well. SunTrust, BB&T, those kind of mergers have a better outlook. So it doesn't seem like a big merger is the solution to their problems. It's kind of delivering quarter on quarter on strategy and getting out of the sort of circle of cost cutting, revenues going down, and as you said yourself, getting to the position where you've actually got revenues growing and better returns.
What could derail that effort to deliver on quarter strategy you mentioned there, do you think?
Certainly. I mean, a large part of their business is dependent on market conditions and the capital market, so that's important.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.